Over the past 3.5 years, I've been actively trading stocks in a personal fund that I began during my senior year of college. It's been a fun opportunity to learn about the markets and practice making trades. However, it comes with a lot of responsibility because investing always entails risk of losing money. Today, I'm going to hold myself accountable and review the fund's performance during 2021 and prepare for 2022. I'll share a presentation I've put together to make the information easier to understand so that we can work through how the fund performed in 2021. To get us started, we're going to review the composition of the fund. As you can see, I hold 58 different positions, primarily in stocks, mutual funds, and ETFs. The biggest reason is diversification. None of the individual positions represent more than 5% of the overall portfolio. So in the worst case situation, if one of those companies went out of business and I lost all my money, I'd still have 95% of the portfolio left over. Again, this is assuming that there aren't multiple companies going bankrupt, which could be a systemic problem indicating a recession. Right now, I'm only holding long positions, which means I'm hoping that the value of the stock or the fund will increase. I have tried with some short positions in 2020. I was probably about 1 for 5. So I've steered away from those for now with things like put options, but perhaps I'll consider them in the future. The focus of these stocks are large cap and mid cap US companies, primarily with market valuations, I'd say over $20 billion. So major US companies that have been performing well, particularly with the pandemic. However, I love innovation. I'm always on the lookout for small companies that have some type of invention or new idea that could allow them to bring outsized returns to the portfolio. That's probably my favorite part, is trying to find these little stock picks that can make a big difference on the performance. One of the biggest determinants of how the portfolio is going to perform is not the actual stocks that you pick out, but which sectors those companies are based in. So as you can see, the sectors where I have the biggest weightings are information technology, consumer discretionary, real estate, and financials. I do have 20% of the portfolio in mutual funds and ETFs that someone else would manage and make sure that I do have some stabilizers. But for the most part, I like technology because I'm looking for innovation. It's one of the biggest growing sectors within our economy, and it's extremely important. On top of that, the next few categories, consumer discretionary, real estate, and financials, I also have major companies, particularly in the US, that have large holdings and can be changing the world. As we go down the list, I do diversify. So I've got some small holdings in industrial companies, healthcare, communication services, energy, and consumer staples. However, I don't cover all the sectors. If you want to review a full list of my holdings, I've listed them out in alphabetical order here. You can see we've got some big US companies like Salesforce, the company I work for, Fidelity National Information Services, as well as Blackstone, a real estate trust. So large diversity here, tons of different holdings. I didn't color code in any particular order. It's just so that you can see them if you're interested. And there's some tech companies I'm excited about there, as well as major players again, like Microsoft. So we'll go on to page 2, so we can cover all 58 of the companies. Again, you can go back, take a look. Okay, now it's time to focus on performance, because at the end of the day, we want to make money. One of the biggest indicators is how well your fund performs compared to a benchmark. The benchmark that I've selected is the S&P 500 total return, because the S&P 500 is the 500 biggest US companies, and it matches most closely with my portfolio. As you can see, in the last year for 2021, the S&P returned 28.7% in total return. Total return includes dividends, interest, basically everything. So it's going to show the largest return. My portfolio returned 30.6% on time-weighted return, which helps us account for me putting in more money or taking money out. So ultimately, if you say S&P best to perform by the metrics, I still beat that by almost 2%. So it seems like a small amount, but we'll show you it does make a difference. Because, hey, this is our number one goal, because if we're actively trading, we want to beat the passive investments. So if someone just puts their money in an S&P 500 ETF, are you able to go ahead, beat that, and provide value? So If we look at my fund's performance all time since August 2018 when I started it, I've returned 91.25%, accounting for all the inflows and outflows, while the S&P 500 accounted for 78.7%. So it's about a 12.5% differential. And this is important because it means, say, on every $10,000 that I've invested, I've returned an extra $1,000 or a little bit more, accounting for taxes and other types of fees that can be associated. So at the end of the day, who doesn't want a little bit more money? And you can see my breakout year probably was 2021. If you look at the chart, the yellowish line represents the S&P 500, while the purple line is my portfolio. So around the beginning of 2021, when the pandemic hit, I made a couple good investing decisions, and it allowed me to beat the S&P 500. So in terms of 2021, some of the stocks that I bought early this year were pharmaceutical companies. Primarily, I was focused on healthcare, still coming out of the pandemic. In 2020, I made some good plays on vaccine companies that we'll cover in a little bit, but I continued that trend. So I bought a couple of cancer healthcare companies, and just companies, again, that are trying to do good things. I've listed a couple, Belicum Pharmaceuticals and Aileron Therapeutics, that I've purchased. They haven't been doing so well recently, and that's part of the reason that I switched gears in the second half of the year. And I tried to buy more sustainable companies, I'd say, in terms of returns. So I pivoted to real estate and financials. You'll see in terms of real estate, a couple big players were Avalon Bay, which manages apartment communities, and that's where Brennan works, which is part of the reason I bought it. And I have Alexandria. That's a huge real estate company, just tons of holdings. And again, the main feature of these real estate companies is they provide good dividends. They provide great income. And on top of that, they're usually more stable. I'm probably not going to get major returns, but I was looking for a little bit of a different type of holding within my portfolio. On top of that, I did look into financials as well. So I bought PNC, as you can see on the screen, as well as Citibank. These are a couple of banks that have expanded recently. They fared well during the recession. And PNC recently bought BBVA, which is a Spanish bank's American Holdings. So they're poised for a lot of growth if they can complete that merger well. Now, in terms of the stocks that I sold, the biggest sales for me were vaccine stocks. I sold Moderna, Novavax, and Vaxart, which I bought early on in the pandemic, probably early 2020. When it hit, I started doing research because there were a lot of buying opportunities. The markets were down, and I became interested in the vaccine stocks, watching a lot of CNBC during some morning workouts. So I went ahead, I made a couple gambles there, and they paid off because I ended up selling the vaccine stocks along with some other pandemic stocks that probably many of you purchased as well, Peloton and Zoom, around the middle of this year in the summer. And those provided a great return and really helped boost the portfolio. This is one of the driving factors, I would say, as to why in 2021, my portfolio started to track above the S&P 500 at the beginning of the year as some of these stocks started to break out. Ultimately took some profits, saved some of it, reinvested some back into the fund. But I also went ahead and did a couple triathlons and endurance events and bought all the gear, including a bike for it. So it was a good way to go ahead and use the money not only towards investing and numbers, but also have some life experiences off it. So now that we've looked at 2021, I need to think ahead for 2022. And my strategy will be to look ahead and increase the weights of those financials and real estate companies to about 18% each. I want to pare down some of my holdings in the information technology sector because we've seen those companies have risen greatly over the past few years. A lot of people are saying they're overvalued. And if people are saying that, usually they're going to trade that way as well. So in the next few months, I'm going to look for a time when some of those companies are up, sell the technology companies and put it into real estate and financials, which are more long-term plays. As we've been saying, they'll have long-term dividends and overall they'll generate income and have pretty steady prices. The biggest area that I need to work on going into this year is finding a few more breakout stock picks. I didn't have too many big ones in 2021. In the pandemic in 2020, I had a couple good picks, as we talked about, in the vaccine companies and other pandemic stocks. However, as I'm starting to roll those over, right now I am rolling over into real estate and financials, which probably aren't going to grow the same way. So then I've got to look into these innovative companies. Right now, I've been looking in areas like cybersecurity, a little bit of cryptocurrency, not so much in the currencies themselves, but as the companies they'll benefit for things like infrastructure. So I bought AMD, which is Advanced Micro Devices, and NVIDIA, because they're the chip makers behind the chips that allow for things like cryptocurrency mining and just the chip shortages you hear about. So I'm excited for 2022. I hope that you got some good insights today looking at this presentation. Again, I've got to mention that I hold positions in these companies, so I'm biased. And on top of that, I don't have financial licenses. So I can't give financial advice. I can only share my experience. And if you want to follow the plans that I'm following, you're certainly welcome to. But at the same time, please do not take it as financial advice. I'm not saying to buy or sell any of these individual stocks. I hope you all have a great day going into the weekend and a great start to 2022.